All right, welcome guys to Investors Guide of Memphis Real Estate. I'm your host, Dean Harris, and as always, I'm with Douglas Skipworth. How are you?
Hey man, doing great.
We are bringing you this podcast to give you the boots on the ground knowledge to be a successful investor here in Memphis, Tennessee. Please like and subscribe to the Investors Guide of Memphis Real Estate on the link there, whether you listen to Spotify, YouTube, Facebook, wherever you check us out at. Be sure to like and subscribe to that. Show sponsors are listed on the screen. Could not be doing the show without those guys. Extremely valuable to us and our team and everything that we do here. Zoom calls. I have paused the Zoom calls, but I'm going to ask if they want to hear them. If you guys want those Zoom calls and you like those Zoom calls and it's something you might be interested in, if I can come on Thursdays, answer questions, I'll be happy to kind of bring those back up. I also help buyers and sellers every day. If you're buying real estate here in Memphis, selling real estate here in Memphis, shoot me an email, dean@CrestCore.com. I have a deal of the day.
Oh, nice.
Deal of the day, 4416 Forest Valley, 38141. This is a 2-bedroom, 2-bath. It's got 1,064 square feet. Mm-hmm. It's listed for $85,000 and it will rent for $1,150, $1,200. ARV is about 135 or 40 grand. It doesn't need much work. I'd say 20.
Okay.
We can verify all these numbers, but let me tell you something about these. These are single family attached homes. I have 3 of these. They perform really well. There is a tenant base that doesn't really want a yard. They don't want that upkeep, and they want just a single kind of parking spot. It's just for them. I do not have any trouble renting those. I wish I had 50 of them, to be honest with you, because they perform really well. So 4416 Forest Valley, 38141. You can check out last couple weeks ago, zip code breakdown for 38141. 2-bedroom, 2-bath, 1,062 square feet. It's listed for $85,000. I'm thinking it needs about $20,000 in rehab, and your ARV is around 140. So dean@CrestCore.com if you have any questions. Today, the crash has happened. So the 2023 crash has happened, and what I mean by that, it's nothing like 2008, right? Almost a polar opposite.
Yeah, there are definitely some differences. Huge differences.
Yeah. Our crash in 2008, I'd like to describe just briefly how that happened.
Good. Yeah. This is fun.
I watched the movie. I was just recently traveling, and I watched the movie again on the plane a couple of weeks ago, The Big Short.
I wondered. Yeah.
I've seen it several times, but I wanted to see it again. That is a Hollywood version of what happened. A lot of the events that they outlined in that movie were actual events of what happened.
Truth is always stranger than fiction.
Well, I kept watching the movie, and there's a bunch of different times through it that I was like, oh my gosh, yes, that I was in the mat. So I was selling new construction from 2001 to 2000 and basically 7 and 8, right before it tried to get out. I stayed in too long. The government was backing loans that they should not have been backing. 535 credit score, stated income, 100% financing from the banks, seller paying the closing cost. I cannot tell you how many times I sold a new construction home to somebody with a 540 credit score. It was 100% financing from Countrywide Home Loans. The seller was paying the 3% in closing cost. If they could float a $500 earnest money check during the build, they were in.
That's right.
And you wonder what happened. That's what happened. Those loans were made. They bottled up this paper and sold it to investors, and all of a sudden they were misleading investors that this was A and B paper and it was C and D, and it blew up in everyone's face real fast. So we had a ton of vacant houses. We had a ton of inventory. We had so many vacant, torn up houses. I was in the middle of this doing BPOs for national BPO or mortgage companies. A BPO is a broker price opinion. Wells Fargo might have had $1 billion worth of mortgages here in Memphis, and they, $750 million were defaulting, and they did not know what they were worth. So they'd hire me. It's a lot cheaper than hiring an appraiser. So they would hire me to tell them what it's worth. So I went right through that during that time. That's how we got to that crash. It took us forever to get out of that. Okay.
Yeah.
You were right in the middle.
I was
right in the middle of the thick of it. I mean, you had real estate. You were right in the middle of this. I did not own any real estate at this time. I was in the business. I didn't really have any idea, much about investing. So now fast forward. Go ahead.
Yeah, well, I was just gonna say that. Fill in some numbers. I mean, like, and we'll get to this, but yeah, I was buying before.
Yep.
And paying interest rates of 7, 8, 9%.
Right. Getting it done,
finding deals, finding opportunities, making it happen. Mm-hmm. Then the crash came, and to your point, I was buying through the crash, which is great, buying after the crash. But just for to kind of put it in perspective, remember this, inventory got to 12,000 units in Memphis for sale.
You know how many we have now?
About 3, about a quarter. Mm-hmm. So, and it had been as low as 2, but you're going to get to there. So it's up a little bit, but it had gotten really low.
Really low.
Compared to where it was in 2008, 2009, 2010, somewhere around there.
So then we're fast forwarding to now. And last year, around summertime, August, we kept
a year
hearing,
and a half ago.
Yeah, we kept hearing 2023, there's going to be a massive crash. We're going to crash. It's going to explode. I heard everybody, all these talking heads in the business, it's going to be the worst ever. What were you about to say?
Yeah, everybody's going out of business.
Everybody was going out of business. I heard that 75% of mortgage companies and 50% of real estate companies and agents were going to be out of the business. And unfortunately, some of that is true, but not to the effect that they thought it was going to be. Where we had our crash was in our number of transactions.
Yes.
So there was a crash.
Oh, yeah. A huge crash.
Yeah, and it's happening now.
Yeah.
It just looks a lot different than what our last crash did. So people are not, they're not acknowledging it the same way they were the one in 2008, right?
No, and I think there are people still waiting for the shoe to drop and the price crash to come.
Oh, and as we told you in the zip code breakdown that we just did of all of these investment zip codes, we gave you the number of sales from this time this year versus this time last year, 50% less on average. Some were lower than that.
Number of transactions.
Yes. I'm sorry. Yes, we were 50% lower in the number of transactions than we were 1 year ago at that time. So
but do you remember the price?
It stayed the same.
It was pretty steady.
And in a couple
it was
of
pretty
zip codes,
stable.
it went up.
Yeah.
So not only did we, if you're looking for my entry point is the lower price that's coming, I have some awful news for you. It's not coming. Those lower prices are not going to happen. No. Because this is, and I'm not the first one to say this. I've read it and watched it, and so I'm not the only one, but I 110% agree. Whenever we do see a rate decrease, we're going to see a price increase. I say 10 to 15%. I don't know.
Okay.
I don't know.
Yeah.
That's me thinking how much higher can it go, and I'm trying to average numbers in there, and don't listen to me. But it sounds like 10 to 15%, maybe 20% on some properties, it's going to continue to go up as the rate goes down. We've got the Hoover Dam is sitting right here now, and there's buyers and sellers that are just sitting back watching and waiting.
Yeah. I thought about it like everybody was swimming. We've talked about this. Everybody's swimming in the pool, and you see the cloud. It gets a little dark. You hear thunder, and then everybody just scatters out of the pool. And so there's still people swimming in the pool. Yeah. But I think, and that's true, but I was like, well, something doesn't work. That analogy breaks down. So I was like, I'm thinking, and this is, my privileged upbringing, thinking about like a country club with a pool and then like tennis courts. And I was like, oh, well, this is more like the rain comes at the tennis courts. You've got the indoor courts and the outdoor courts, and everybody's playing, having a great time. And then the rain comes. And so the outdoor courts close and all the outdoor players leave. But there's still the indoor courts that people are playing, having a great time in there. And what you're saying is like, as soon as the sunny skies come again,
It's going to be flooded.
It's going to be the outdoor courts, the indoor courts. It's just going to be flooded everywhere.
Because we're all sitting here
Because everybody's
watching.
waiting for the rain to go away and the sun to come out again.
Yeah. We're watching with anticipation of something that isn't going to happen. There's what bothers me, or what I would share to caution on to investors. We're sitting here, some are sitting here waiting. It's almost my time. I cannot wait to get in. Guys, if you're waiting on a 30% lower, like, oh, the prices are dropped, now's the time to enter into that, we would have to have a rate of 12 and 13% for another 24 months before you started to really see people get desperate to sell houses. I have buyers all the time asking me about owner financing. That is not entered into anyone's mind. Why? Because sellers are still getting their number. The pricing is still there.
Yes.
All of you guys calling me, because there's a bunch, call me for owner financing deals. They're not here. Nobody cares. They don't need to do that. That only is relevant, in my opinion, when when sellers can't get their number. If they can't sell it high enough, that's right. If they can't get their number, then it's like, hey, I got to do anything to just take this burden of mortgage off of me, right? Or I've got to do anything to just get out of this situation. It's not happening because of the pricing is staying steady.
Yeah, and the demand declined.
Yep.
But so did the supply.
Yep.
So the whole curve shift back in Econ 101.
Yeah.
So when the demand declined, people thought the price would go down. But the whole curve shifted. And so the prices stayed the same because the demand and the supply went down. And because people didn't want to sell.
That's right. And in normal times, that is what happens. Right?
Yes. Yeah.
The backlog was so far back.
Yeah.
It was so far back that window only could allow so many people to get out of it, and it's going to shut again, and there's still the backlog. If we had a normal backlog, then you might see some of that happen.
Some price decline.
Go down,
right.
And things go down, and some owner financing available.
Because the demand
stuff
will increase. But so will the supply. So you're not saying prices are going to triple.
No, God, no.
They're going to go up because both of them are going to move up.
They're going to go up though. So your $200,000 house that you bought that you could buy right now for $185 because the rate's a little high is going to be worth $220 and $230 in about 3 years. I'm just here to tell you that.
Yeah.
You and I had a conversation yesterday. I am buying more houses right now than I'm not going to say than I should, but more houses than I normally would in an 8% environment because of what the future looks like. I'm never going to be able to buy them again. We went through some of the pricing, right? It's very similar to the one I gave you for deal today. I mean, I'm in that 85, 100, fix it for 25 and 30, worth 130. So those houses are going to be worth 160. They're going to rent for more. They're going to be valued for more. And I'm going to look back and go, man, I wish I'd have bought double what I did.
Because you like those areas.
Because I like those areas, and because the pricing later is going to be more expensive. Yes. I'm just not going to be able to get them for the same price. So that's kind of like our message today, and like trying to relay to people what you really feel and what you really, really think is sometimes difficult, especially through this outlet, right? So I have never been more convicted of a scenario that's going to happen than I am of this one.
Yeah.
We're not going down in pricing, because if you look in some other major cities, as our city grows and you look at other major cities that are our size or a little bit bigger, you can see where it's going.
Yes.
You can look at other cities and find out where our pricing and where this is going.
Yeah, and I think that's what you mentioned there, there are long-term factors at play here as well. The long-term demographic factors, as well as the long-term supply constraint factors. We're not building enough houses for the people that are coming. So there's just not a lot of opportunity. So prices have to increase over the long term.
There's no other option.
It's just, I mean,
can you imagine the guy? How many people are out there right now going, man, I'm not selling my house right now. They've been saying this for a year. The rate's too high. I can't get what I could 3 years ago. I'm going to wait. We don't have to. I'm going to wait. All right. There's millions of those across our country, right? What do you think is going to happen when we start hearing a couple of Fed meetings in a row where it's an eighth down? a quarter this time. Whew. Stay steady for 2 meetings.
Yeah.
Down an eighth.
Yeah.
Then what? You think how many of those ticks do you think it's going to take before the masses start
Buyers and
catching
sellers
on?
are ready.
Like it's going to be like I gave the Hoover Dam. It's going to be a little bitty pin drop at first, and then it is going to come out. So you're going to have buyers and sellers enter back into the market.
Yeah.
I think I remember you telling you yesterday the example of when the levee I love Led Zeppelin. When the levee breaks and it does come, you're going to have a window there where somebody's going to get some deals. Right. 'Cause it's not going to, I mean, the pricing that the sellers won't catch up. They'll just be like, oh, I can get a normal price now, right? Not knowing that they could probably get a lot more. There's going to be a 3 to 6 month window right there. And then you're going to be right in the flow of everything. I'm just here to tell you the time now is to buy.
Yeah.
I don't, we come back into this, topic about, hey, it's time to buy. And if you listen to this podcast, you listen to everyone, that theme doesn't change for us.
No. I was like, theme, what's the theme? What's the summary of today? And it was like, buy now before the prices increase.
Yeah.
I mean, that's, I think the message. And I mean, I told you, it's like, I closed one yesterday. So I know you got several under contract. So it's like, man, part of us is, I don't know, practicing what we're preaching. It's like, we're just here telling people what we are doing.
Yep.
And saying, hey, here's what we're seeing. Here's what we're doing. Maybe that's beneficial to you. As you listen, say, hey, they're buying. This is what we're doing. I'm doing it. You're doing it. As the opportunities present themselves.
The message for me in this podcast has never been, I'm right about every single thing that I talk about on here. And if you don't do it this way, you're completely wrong. That has never been what I've come on here to talk about. What I've come on here to talk about is what I do from an investment standpoint, what I'm involved in and what I see. We talk about what you do.
Yeah.
We talk about what my investor clients call in and want to talk about. Those are the things that we talk about here. So not every single thing that I discuss and talk about here, you're going to agree with, you're going to like. I mean, but the point is this is what we're doing. This is working. We're cash flowing. This is happening in here. And I think that's kind of the message I want to give about this right now.
Yes.
I feel more convicted that these prices are going to go up. The rent is going to go up again, not tomorrow. We're talking future. I'm thinking in a couple of years. If you're in this for buy and hold and you're in this for years, then this is something that's relevant to you. Is to pay attention to what we're doing and pay attention to what we're saying. Alec, our producer, showed me 4 times on here where I've talked about, he's given those year examples. Right. I'm like, if you're buying right now, and I'm giving you those numbers, and it's like the proof is in the pudding from what I'm telling you.
Yeah. No, I agree. Hey, one question that I had, kind of deep dive into it. Do you wonder if supply will increase more than demand? Like, will there be more sellers than there is demand?
Nope.
Yeah.
Nope. Mm-mm. That would
too
have
much
happened.
Demand.
If that was the case, that would have happened a while back when we had all these people coming out to buy at 3% interest rate. It won't be able to catch up.
And I agree with you. I think the trends are such, and especially with long-term rentals, like you and I know 10 plus years ago, but the crash, I don't know what would have happened if all those funds, I don't think it would have been near as bad if
no, it wouldn't have.
We had all of these investors. The single family rental market is way more mature. I don't know if it's mature, but it's maturing. It's so much farther ahead than it was 15 years ago. And I think that's the floor for demand always.
Yeah, I think the only way you could catch up with that and we would be flush with properties is if you could stick another Cordova out there right now. And that obviously can't happen.
But people are going to buy. I mean, I think the institutional money is going to be competing for that like they never did before. So I think it's always going to provide that backdrop of demand such that supply can never be such that prices crater.
So from an investor's standpoint, we're telling you now it's going to get more expensive as you go.
That's the message. And like, if you want to buy in the next few years, then you're probably best. You're definitely best to be buying now and potentially buying through it. Like there's the whole dollar cost averaging like you would in a mutual fund where you're just putting money in over time, building a portfolio over time, and the cost, sometimes you're high, sometimes you're low.
Oh, you're never going to buy the same way. With your portfolio, you've never bought the same way, right? I mean, there's a period of 6 months where you can buy the same way, but stuff changes. You can never buy the same way.
Yeah.
So who cares about this pricing and who cares about this interest rate? To be honest, buy the right house.
Buy the right house that fits your model with where you're going.
Yeah, that's right.
That fits with your strategy.
All right. Anything else to wrap up today?
No, man, that's great.
Great show. It's happened. So if you got any questions, if there's anything I can help guide you through this, just let me know. We'll catch you guys next week.